If you watch this video, you're going to be a smarter investor, you're going to be a more knowledgeable person. Understanding the major exporters of key resources can be a useful starting point for making informed investment decisions. For example, Chile is the world's largest exporter of copper, accounting for over 28% of global copper exports in 2020, which could be attractive for investors looking to gain exposure to the copper market or understanding how the dots connect. Similarly, Saudi Arabia, Russia, Iraq, Canada, and the United Arab Emirates, and more recently, the United States, are currently the largest oil exporting countries, and investors may consider looking at these countries' economic and political developments to look for opportunities. This is so key, but if you didn't have that knowledge, you have to rely on the Bloombergs and the CNBCs and the Jim Cramers of the world. In terms of steel, China is the largest producer and exporter. That's about 54% of global crude steel production in 2020. China is also the largest exporter of aluminum, while Australia is the largest exporter of coal and iron ore. Iron ore, of course, most of that used to make steel. So that's where Australia and China work together. But when there's a problem between these two countries, suddenly you have an issue, and there are companies that are involved in that. So you've got the geopolitical things, but you've also got looking at the companies that are going to be involved in the production. Investors may consider monitoring the production and export levels of these resources, as well as broader macroeconomic and geopolitical factors that could affect demand and supply dynamics. By looking at this from a zoomed out 30,000 foot view that considers both the production and exports, well, then investors are better equipped to identify potential opportunities. And like I said, just being more knowledgeable about these subjects makes you more confident. You can sleep better at night. It's important to note that factors beyond just the production and exports can impact resource markets and investment opportunities. For example, geopolitical events, conflicts, natural disasters, they can disrupt the supply chains, production, and exports of these key resources. Let's talk about oil first, all right? In the case of oil, tensions in the Middle East, including between Iran and Saudi Arabia, have historically led to supply disruptions and price spikes. Some good news is that more recently, these two countries, with China in the middle, have started to say, okay, let's talk. That is ending years of tensions in between these two countries. Sanctions imposed on countries like Iran, Russia, Venezuela have restricted their ability to export oil, potentially leading to shifts in global oil prices and supply. And of course, we saw that over the last year and a half, and we see that many times before as well. For instance, OPEC announced it's going to be imposing deep production cuts in an attempt to shore up prices and stabilize the oil market. And you also see that they're doing so because of what was previously an oversupply and now more recently some other factors too. Or 2022, sanctions on Russia due to the war in Ukraine resulted in a shift in oil distribution from Europe to Asia. So as soon as Europe said, no, we don't want your oil anymore, Russia said, okay, where are my partners? And they went to, of course, India, big time, as well as China. Very, very important stuff. You see how this happens. This affects corporations, companies, individuals, and of course, the economy as a whole. They shifted that distribution from Europe to Asia as Asian countries looked to take advantage of the availability of cheaper Russian oil. As Europe was highly dependent on Russian oil imports for energy consumption, the US saw an opportunity to export oil to Europe at 4 times the regular price, taking advantage of Europe's desperation to import from another source. Think about this, all right? Most people just they can't expand, they can't zoom out, and because they have this one source of information that they go to, maybe it's a YouTuber or so on, but I'm here to empower you. This is the financial education that you need to have. Copper Political instability or regulatory changes in major copper producing countries can affect the global copper market. For instance, in 2019, you had protests in Chile that led to disruptions in copper production and exports, contributing to a rise in copper prices. Similarly, changes in government policies, regulation in other copper producing countries like Peru or Congo can impact the supply and the price of copper. Now, I'm using these things as examples, and you got to learn to take what I'm saying here and expand on that. It's not just about these items that I'm mentioning, but think about this and extrapolate, okay? What about gold? Gold prices are influenced by macroeconomic factors like inflation, interest rates, and currency exchange rates. In times of economic uncertainty, investors may flock to gold as a safe haven asset, driving up demand and prices. Changes in mining regulation or tax policies in major gold producing countries like China, Russia, Australia can affect the supply and price of gold as well. There's many factors that could be impacting here. Of course, we generally see worry, there's concern, what's going to happen to the banking system, and then you'll see, that money go into gold, but it could be for many different reasons. Coal. Changes in environmental policies or regulations in major coal-consuming countries can impact the demand for coal and affect the coal market. For example, countries like China and India are saying that they want to reduce their carbon emissions and shift towards renewable energy sources, so demand for coal may increase. At this time, that hasn't happened. In fact, they're using more coal than ever before. But they say that, and of course, long term, that might not be a wise investment. Short term, might be all right. At least so far, it's been good, but the price is going higher and higher. Changes in mining regulations or labor disputes in major coal-producing countries like Indonesia, Australia, United States can affect the supply and the price of coal as well. Beyond these types of external events, broader market trends and factors need to be thought about. They can impact the resource markets and investments. Look at the change from how much money had been basically not in existence before, now that's been put into the eco-friendly, green, and renewable energy. It didn't even exist, really, not that long ago, and now trillions of dollars are going in that direction. Whether we like it or not, governments are throwing trillions of dollars into it. And I also think that uranium will be one as governments start to say, okay, let's do nuclear, and this is going to be something we want to invest in. You're going to have trillions go that way too on a global scale. Okay, this is just showing us that the fossil fuel industry, oil, coal, all these things might be impacted negatively, but it will take a period of time. There's no question about that. I think the fact that they are rushing into this is ultimately going to make people pay much higher prices for what the energy that they're going to be using. It's like you're going to be using oil and coal and all that. You're just going to be paying a much higher price because they've deemed it to be something that we shouldn't be using. Investors looking to identify opportunities in resource markets should consider a range of factors beyond production and export levels. You got to look at the geopolitical problems, natural disasters, and of course the broader market trends. Is there a recession? Okay, well suddenly we don't need as many of these particular resources, whether that is oil, cement, steel, copper, and so on. By looking at this from a top-down view, we're going to be able to make much better choices. This was a lot of stuff, I realize that, but I hope that it was the financial education that you can really use. If it was, make sure to share this with your friends, with your family, bookmark this, come back to it, email it, send it to somebody, because this is the type of stuff that more people need to know. I appreciate you being here. I'll see you on the next one. Take care.